We've actually seen interesting movements coming through on the T-bill auction, and then also inflation is looking very attractive right now, far better than what it was a while ago. Give us an indication of the overall scenario, because one that the economic data is painting is that we have a very strong economy that's filtering through.
Hi, good afternoon. Yes, indeed, the central bank has dropped interest rates by 25 basis points in April, after 50 basis points drop in March, and that's in the back of very low inflation in the economy. We are sitting now at 2.71% for Maputo, which is the rate that the central bank tracks for policy purposes. This is after we reached 16.51% at the end of 2010. So you can see a drop of more or less 14% over the last 14 months or so.
I mean, when you look at inflation, consumer inflation sitting at around 3.37% year on year from 3.81%, I mean, this is obviously relatively low when you compare it to other sub-Saharan African countries, even just comparing it to what we see here in South Africa. What is your view with regards to the sustainability of this inflation number and some of the risks that lie ahead?
Yes, one of the main factors that's driven the inflation to these levels is the exchange rate, which has stabilized against the dollar. It's stabilized at 27% to 27 to 28 meticals. When we had a rise in inflation in 2010, that was mostly driven by high oil invoices, as well as the depreciation of the metical. So we have seen the inverse move happening in 2011.
I mean, obviously, we could actually see some of those effects still feeding through if we do see a spike in food and oil prices. But let's now delve into the 3-month Treasury bill, which I mentioned has fallen to around 5.5% on the yield front, and that from 6.5%. This is quite a big drop that came through. Are you happy with these kind of levels? I mean, sitting at around 5.5%.
Yes, these are very, very low levels, and probably the lowest we've seen for the past 10 years or so. And the central bank is trying everything it can to push those levels lower. And in fact, they didn't issue any treasury bills during the whole of March. And during April, they started issuing, but very, very small amounts. And this is basically pushing the rates down. And on the other hand, we also see a very, very big drop on the interbank money market rate, which has come down from around 13% at the end of last year to it's now at 6.5%.